Euro dollar here on the hourly. We did all this funky stuff right here. We had this happen, right? We had our break and close above this level again. This was CPI came out Tuesday, rocked the markets, and then we spent the rest of the week kind of coming back from that. What I was looking for was a break of this shelf, right? Because what we're, I guess, kind of a bigger perspective. What we're trying to think in this moment is two things, right? Either we're going to see a continuation or a correction, right? Market put in this move and we consolidate, usually in some type of consolidation pattern. This one was like a falling channel, right? And either one of two things are going to happen. We are going to breathe for a little bit, like a high and tight flag or low and tight flag, and then continue smashing down, or we're going to correct. And as always, what I did was I bracketed these two levels, bracketed my lows, bracketed the highs, and waited for one to break out. Now we did get a breakout here and a retracement here, but again, because I'm not a true trend following trader, there's nothing I can do here. So I'll give you an example. Because some of you guys looking at this, you're like, well, Keel, look at that. We had a break, break above, close above, or yeah, we retrace, nice little dojis, inside bars, and we had a higher high, higher close right here. This is an awesome entry technique. It is. But the problem with me and how I trade, where do my targets need to be if I'm trading it right here, guys? Knowing my style. If you're a trend following trader, different story. We can draw that out a little bit. But my targets have to be to retest the highs. So I don't think I need to draw it on for you to tell you I'm not going to get a good risk reward from here to here. Now, if you are someone that is a trend following trader, you're looking someplace different, right? You're bringing out Fibonacci extension 127 inside structure, looking left. Sorry for talking fast, right? 127 extension could be one target area for you. All of a sudden, you're looking at, what was our ATR again? Is it 7? All of a sudden, you're looking at this type of move. Wrong tool, wrong tool. You're looking at this type of move and you're saying, okay, if I get one ATR below the low here, that's 107.27, that's 107.20s. That puts me right here. If I'm looking for a move to that 127 extension, hey, hey, hey. You see how that's a solid trade, guys? And if you're looking a little bit higher, which I'd recommend looking a little bit higher, this 1.6, well, the biggest zone is right here. It's you got a little risky there, but this zone right here around the 1.618 is a much better zone. I didn't do volume, but let me just see if volume gives us any clues here. And if I'm moving too fast, I'm sorry. I get on autopilot with the trading stuff some way. Okay, so look at that. 1.618 Fibonacci extension, low of our inside structure. We see the void start to close. You guys see all this? If you don't and you're new, let me know. I will explain it. But this is, we're talking about analyzing targets, and when we analyze targets, it's not just we don't just close our eyes and pick a place, guys. We do analysis. Does that make sense? Just going back to the discussion on analysis. So, I just use my tools. I use my tools, right? I always start with structure. So this is the first thing I identified, right? This structure low. And then a higher moment right here, structure 2. I drew my fibs out, right? I know my fibs are confluence. Oh, look at that. Fib and structure lining up, right? Throw some volume out, right? Here's our breakout, big volume, breakout. Here's our void, right? Here's where our volume picks up again, right? That shelf starts right below that level, right? One more thing I can do I didn't do. Who sees it? CTSers. CTS traders, assemble. I tend not to do this one as much anymore. This one's kind of fallen through the cracks as I as I go through trading and I see what is more useful and what's not useful. Not saying it's not useful, but for me in my analysis, this one has kind of become less important. But yeah, the AB equals CD pattern, the one-to-one measure move. Now I don't want to say it's not important at all, guys. It's less important to me as far as stuff. But look, right at that level. So we got if this was here, and here's the cool part. If we were doing a CTS trade looking for selling opportunities, and this is when I say think like the other trader, right? Don't just pick random targets. As a buyer, your targets should be at the level where you think sellers will start being interested. So if you're doing a CTS for a selling perspective, right? You've got an AB equals CD pattern. You've got a Fibonacci extension. You've got minor structure, right? You've got a pretty decent CTS score at this level already. You're probably looking at this and saying, hey, this is a place that I'm interested in. And if I'm interested in this area as a seller, is that not a big beware signal for a buyer? To be like, and going up in the conversation we had earlier about the different lines of defense, the monkeys versus the unicorns versus the elephants. If you have no reference to what we spoke about earlier, I apologize. It sounds so weird. But if you tuned in earlier, you know what I'm talking about, right? This is where our monkey line starts. Probably a good place to kind of bail. So you can see the difference between, hey, the way I trade trend continuation, because again, I'm not a true trend continuation trader, no way could possibly take advantage of that small one right here. However, if you trade continuation style, that's a hell of a move. That's a hell of a move. Now, it's not over, right? Because as we look at this, and it all starts with this higher high, higher close. As we look at this, we say the area for expansion, which I'm interested in looking for, is from this area to this area. This is my box of glory in which I'm looking for trading opportunities. We just put in another fresh break, higher high, higher close. So all this does is reset the whole deal. So now if we get another retracement, guess what we can do? We can load up again. Analysis is already done. Nothing changed with the target level. So we can load up again and look for another trading opportunity. So let me get this into the pro trade log real quick as well, and we'll continue this on a lower time frame. Before you head out, I want to remind you that starting on March 25th, we're going to be hosting a free 1-week online trading workshop. So mark your calendars. I'll have more details out as we get closer to the date, but wanted to give you a heads up because as you know, or as you'll find out, attending the workshop live is a much greater experience than just catching the recording. So if you can make it to the live sessions, feel free. We'll have information out as we get closer to the date, but just watch this space, stay in the loop because you don't want to miss it. All right, take care.